What's going on, apes and apettes? TCI here. Welcome back to the channel. We have an intraday update to get into, a lot of very exciting information, so let's get to it. Hit the like button, subscribe to the channel, and comment down below your thoughts and opinions on this video. If you guys want to get totally free stock, as well as always, links down below in the description for Weeble, Mumu, and Public. And if you want to come trade with us and join the trading community, that is also linked down below in the pinned comment. So for the day so far, AMC is down about 3%. And I want you guys to pay attention that the NASDAQ is up, but it's not up all that much. It's only up 0.45%, S&P up 1.2%, and the Dow up about 1.5%. So you're definitely seeing that value rotation, that rush back into value. And why is that? That is because the federal funds rate is, the implications of the March 16th meeting are starting to turn back again to that 0.5% rate hike. We will have to see over the next couple of weeks what happens, but this is something I've been talking about for a while now. When you see this probability of a 50% rate hike go up even a little bit on any given day, you do tend to see value stocks outperform more of your growth stocks. And that's exactly what we are seeing today. But as we know, nothing really compares in the short term until that Fed meeting to the fear in the markets because of the Ukraine-Russia situation. That's really all the markets care about as of right now. It will soon turn into the markets don't really care about that. They care about the Fed much more. But March 16th, you're probably going to be 2 weeks out before people start to pay attention to that and start to care about that again. Let's check out Unusual Whale's Twitter account, because there were some very interesting things that I do want to go over. The German finance minister says they are open to cutting Russia off SWIFT. And essentially SWIFT, you can imagine this like if you are in Russia and you are trying to send $1 billion to an account in America, you're gonna have to use SWIFT. So if you cut them off from SWIFT, that essentially means that you're no longer able to send money or a substantial amount of money in and out of the country. So that's why the markets did rally over the past 2 days, because Biden did not cut off SWIFT. He didn't even think about it. It looks like it's not going to happen, and markets are pricing that in. We also have not really done anything to Russia itself. We haven't hurt their economy really in any substantial way or meaningful way, and the markets, they love that. They love when you don't, hawk down on a country, when you let them just do what they do. It's good for business on Wall Street. And that's very important, as you do see more countries say they are open to cutting off Russia from SWIFT. If that conversation starts to grow even more, then that could definitely be a very negative catalyst for the markets. You also see that Russia's membership in the Council of Europe is now suspended, and there's a lot of fighting. Ukraine is doing their best, but ultimately it looks like you're going to get another Cold War or even possible World War III down the line. So not all a good situation going on over there, and it's definitely going to catch up with the markets. I think this is really somewhat of a dead cat bounce when it comes down to it in the broad markets, because we have so much fear still there. Once Russia-Ukraine fear dies down, it'll be more World War III, Cold War fears, and then you're going to get the Fed on top of that and inflation going higher. So it's definitely a choppy year that we are in right now. I also want to show you guys this one. It says the SEC has proposed a new rule requiring short position disclosure, and I'm going to go over that in just 1 second with you guys. But it also says Russian Foreign Ministry spokeswoman says there will be detrimental consequences if Sweden and Finland try to join NATO. There will be no Russian participation in Eurovision 2022. So it's a lot of this World War III kind of verbiage going back and forth. I mean, Putin's already threatened a nuclear attack, so just stay mindful of that. Keep your positions, nimble and how you're going to move. It's very back and forth over the past couple of days, and it will likely be that way for a while. As far as those new short sale rules. This says SEC short sale rules would force investors to submit updates each month. The key points: Wall Street's top supervisor said the proposed changes would require investors to collect and submit certain short sale data to the SEC each month. SEC Chairman Gary Gensler said the new rules would apply to investors who held a short position of at least $10 million or the equivalent of 2.5% or more of the total shares outstanding. The proposed rules are the latest attempt by the SEC to magnify its oversight of short selling, which has been blamed for causing wild price swings in equities like GameStop. So that's also, goes without saying, a very, very positive thing. And if that were to happen, just imagine how much more transparency at least we would get here in the market. So that's really cool. We'll just have to wait and see how that does pan out. But $10 million, that's not a very large amount. So you're going to get a lot more disclosure of that. But like I said, we'll just wait and see how that does ultimately play out. As far as the data that you guys need to know around AMC, we're looking at 21.13% short interest of free float, 108.44 million shares that are sold short, 1.9% cost to borrow max, and these numbers are doing some weird things. They go up a lot, they come down, they're doing some weird things. So take that with a big grain of salt. The share utilization is 100% and the days covered is at 2.34. So not too much has actually changed here. We're staying pretty much around that 21% short interest mark. And like I said, cost to borrow numbers are doing whatever the hell they want to do. But looking good nonetheless. As far as options are concerned, we're seeing 0% positive order value. 3 orders totaling $270,000. If you are unaware, that is a very low dollar amount of options from institutional investors on any given day. Very, very small. On most days, like yesterday, we've seen $22 million in options that were bought by institutional investors to the bullish and to the bearish side. So the fact that we're seeing a 0% positive order value on a little bit over $250,000 worth of options, not a big deal, doesn't really show us too much, but it does say that a lot of institutions are really back and forth. They don't know how the markets are likely to go right now. They're not really putting a lot of money into options. So pretty interesting right there. And like I said, just pay attention to this, investing.com/Fed rate monitor tool. And that's going to, give you guys a gauge of what is likely to happen throughout the rest of the day or, in the near-term future. The higher this 0.5% or top line number goes, the more bearish the markets are going to feel heading into that Fed meeting that is 2 weeks, 5 days, 1 hour, and 26 minutes away. And we actually see that coming, this 0.5% coming up a little bit today. And it's kind of surprising that the markets are bouncing, but it could mean you're just going to see more volatility and we could go up and down, up and down. So be mindful of that. Watch for that end of the day sell-off as well. As far as the max pain for today, that is $17. The max pain for next week is also $17 as well. The Stocko tracker data, we're looking at 24,000 calls that are in the money. Out of the money calls of 142,000, puts that are in the money of 18,000, and puts that are out of the money at about 62,000. So if we do see, for whatever reason, a move to the upside by the end of the day today, it could be quite an explosive move. Next week, about 8,000 calls that are in the money, 60,000 that are out of the money, about 6,000 puts that are in the money, and about 34,000 puts that are out of the money. So next week, not a big option expiration week at all. The week after that, not too much as well. March 18th, that's going to be the bigger expiration. You do have 280,000 calls that are out of the money and about 8,000 that are in the money. That is, like I said, a very low ratio of calls that are in the money compared to out of the money. So it does tell me that we could see a gamma squeeze here in the next couple of weeks to get back to more of a normal level. Right now you're seeing like 10% of the total or less, 5 to 10% of the total calls for any expiration that are in the money compared to out of the money. That's like a 90% out of the money ratio. So it's going to be very interesting. Just be mindful of all of this presented to you here in this video. It's going to go back and forth. Be nimble, be, safe with your strategies. So thank you guys for watching. Hit the like button for me, subscribe to the channel, and comment down below. Get yourself some free stocks, link down below in the description, and come join the trading community down below in the pinned comment. Like I said, thank you guys for watching, and I will see you in the next one.